Welcome to the latest episode of Wealth Uncensored. Today I want to talk about how many wealthy families who use UAE foundations or hold assets in UAE corporate structures are subjecting their assets to tax unnecessarily. The UAE implemented a corporate income tax a while back that subjects foundations and UAE companies to a 9% corporate income tax. And a lot of wealthy families in the UAE and also a lot of people outside of the UAE own assets through UAE foundations and UAE companies that predate the corporate income tax. And now those assets are now subject to the corporate income tax. Welcome to the Wealth Uncensored podcast, straight talk about everything that impacts your wealth. In each episode, I share what I've learned through my own experience and 2 decades of helping high net worth clients structure their affairs to minimize taxes and protect their assets for the next generation. I'll also feature special guests who are experts in their own field, sharing their knowledge and experience to help you protect what's yours. I'm your host, Jimmy Sexton. Let's dive into today's show. First of all, I want to talk about foundations first. When we talk about foundations, I'm not talking about charitable foundations like the Bill and Melinda Gates Foundation. What I'm talking about is civil law foundations that are much like trusts. A foundation that's used for wealth planning purposes is much like an incorporated trust. Think about a company, but instead of having shareholders, it has beneficiaries. Basically, you have a founder that sets up the foundation. You have a foundation board or council, as it's called here in the UAE, that manages the foundation. And then you have the foundation beneficiaries. The main purpose of foundations is to hold and manage a family's wealth. The family puts the wealth in the foundation. The board of counselors manages it for the benefit of the beneficiaries and then makes distributions to the beneficiaries as necessary. The UAE we have 3 free zones in the UAE that offer foundations. We have DIFC, which is the Dubai International Financial Center. We have ADGM, which is the Abu Dhabi Global Markets. Then we have RAC ICC, the Ras Al Khaimah International Corporate Center. These foundations, like I said, are used for wealth planning, asset protection, privacy, and things like that. Now, traditionally, those types of foundations have been set up in offshore financial jurisdictions like the Cayman Islands or the Channel Islands and things of that nature. Back in, I believe, 2017 or 18, the first foundation law got implemented in the UAE, and they've become very popular for several reasons. One, the UAE isn't a tax haven. This is a global financial center, so it's viewed much more favorably as foundations in a lot of these jurisdictions that are considered very offshore, because a lot of these offshore jurisdictions, when you try to get banking for that foundation, it's quite difficult. A lot of times, the underlying entities, when they're doing business deals with third parties, those third parties are often a little bit reluctant to do business with a structure that's ultimately owned by a foundation, really offshore jurisdiction or jurisdiction that's considered very offshore. The UAE has become UAE foundations have become very popular in that sense because, again, the UAE is a robust international financial center and not a tax haven. Foundations started gaining popularity here right around the time COVID was happening. And at that time, there was no corporate income tax here. A foundation in the UAE, there was no tax on any of its income, just like in offshore jurisdictions, but being in Dubai or Abu Dhabi or Ras Al Khaimah here in the UAE, which is not considered offshore by most people. This created a very attractive alternative to offshore financial centers because you could gain all the benefits without being offshore. People started setting up more and more foundations here in the UAE. At this point, the UAE has more foundations than all the Caribbean islands and the Channel Islands combined. They've done a very successful job at marketing foundations. Now, one of the issues that's happened with foundations is under the UAE tax law, they're considered companies. A lot of people that set up foundations before the tax law came into effect did with the assumption that they're not going to be subject to tax. Then the UAE tax law came into effect and subjected foundations to the 9% corporate income tax because UAE foundations are treated as corporations for purposes of the UAE tax law. In order to fix this, what the UAE did is they created a provision in the tax law where a foundation can elect to be treated as an unincorporated partnership. Essentially, what this does is it makes the foundation be treated as tax transparent. Essentially, it becomes a non-taxable entity, and all the foundation's income is allocated amongst the beneficiaries of the foundation. As long as the beneficiary wouldn't be taxed on the income, then there's not going to be any income tax. One of the big problems with subjecting foundations to corporate income tax, for example, is in the UAE, we don't have a personal income tax. So that means, let's say I own a portfolio of securities, capital gains, interest, dividends, all that stuff, if I own it individually, is not going to be subject to any income tax here in the UAE. Likewise, if I own real estate, rents received from that real estate or capital gains, if I sell it, also not subject to income taxes. This is something that sort of caught a lot of people off guard with foundations. For people who set up foundations before the income tax came into effect, they may have contributed real estate to the foundation. They may have contributed portfolios, maybe an art collection, maybe gold, all kinds of different assets they may have contributed to this foundation to hold and protect it for the benefit of the beneficiaries down the road. What happened is, at that time, because there was no corporate income tax, it was no different whether they owned it individually or the foundation owned it from a tax perspective. But now, because the foundation owns it and because the foundation's treated as a company, there's this unexpected corporate income tax that the income that the assets generate would not have been subject to if the assets continued to be owned by an individual, which obviously makes the foundations a little bit less attractive, because if you own the assets individually, no tax. Now you put it in a foundation, all of a sudden you're paying 9% income tax. Again, this problem was solved by the UAE putting a provision in the tax law that foundations can elect to be treated as unincorporated partnerships, essentially making them tax transparent, and the income being allocated between the beneficiaries. As long as the beneficiaries wouldn't be taxed on the income, then there's no tax at the corporation level or the beneficiary level. This was a very innovative solution to solve this problem and encourage people to continue to put assets into foundations without having the disadvantage of having to pay the tax. One of the other issues that came about is this. A lot of times, foundations don't own the assets directly. In a typical structure, you have a foundation, and the foundation owns one or more companies, either directly or indirectly through a holding company owned by the foundation that owns all the assets and generates the income. Even though we've eliminated the tax at the level of the foundation, if the assets are in the underlying companies owned by the foundation, those companies are still subject to the 9% corporate income tax. The problem's only partially solved. The UAE came up with an innovative solution for this as well. And what that solution is, they've said if the foundation meets the criteria for being considered a family foundation, which basically means that it has individual beneficiaries that are identifiable, or it has identifiable charitable beneficiaries, and the foundation has elected to be treated as an unincorporated partnership, then you can actually elect for the underlying companies to also be treated as tax transparent, meaning that you eliminate the corporate income tax on the income generated by the companies owned by the foundation. Just to go through that again, if you have a foundation that would have ordinarily been subject to the 9% corporate income tax, you can elect this unincorporated partnership status. Additionally, the foundations meeting the criteria of family foundations can elect for the underlying companies to be treated as tax transparent. You essentially eliminate all of the corporate income tax that would have been levied within the structures. Now there's no more tax disadvantage to placing your assets into a UAE structure. Now, if it's income that you would have, if you own the assets individually, if they didn't generate or a tax liability for you, then they're also not going to generate a tax liability within a foundation structure, even if they're owned by underlying companies, because of this unincorporated partnership election, tax transparency election. Now, this is really good news and for people that have legacy structures. In the UAE, wills and foundations and trusts have really only come to be in the last 10 years. So prior to 10 years ago, if you weren't a Muslim and you wanted to do estate planning for your assets in the UAE, or for your estate that is going to be subject to UAE estate tax laws, you had to do some pretty creative structuring. And a fairly typical structure is that a family in the UAE with significant UAE assets or UAE businesses would put all of these assets and businesses into corporations. Normally, you'd put them into segregated companies to silo risk or have different activities segregated. Fairly typically, you'd put each piece of real estate in a different company. For example, you've put different businesses in different companies. You'd put a portfolio in a different company. Maybe you have a corporate structure that encompasses maybe 10, 20, 30 companies. And then you would have all of those companies owned by an offshore company. We'll use the BVI as an example. And then you would do all of your estate planning in the BVI. Because if you tried to do estate planning using a will or trust in the UAE prior to 10 years ago, it just wouldn't have been recognized, and your assets would have been distributed in accordance with Sharia state distribution laws, which a lot of people didn't want if they weren't Muslim. So the workaround was they put all the assets in UAE companies, and then had all those companies owned by a holding company, like I said, in the BVI and the Caymans or something like that, and did the estate planning there. That was the workaround. The problem is these legacy structures are now subjecting a lot of income to corporate income tax that wouldn't have been subject to tax if these assets were still owned individually. So now if you have, let's say, a company in the UAE that owns your portfolio, a lot of that income that's being generated with a portfolio might be subject to this 9% corporate income tax. If you have a company that owns real estate, the rental income is now going to be subject to 9% corporate income tax, and it wouldn't be if you owned it individually. The same goes for capital gains generated by the real estate. It was really interesting because I had a meeting with a client a couple weeks ago. They had one of these legacy structures. They had 30 some odd UAE companies that owned real estate and operating companies and all this stuff. All of this was ultimately owned by BVI companies. They were super frustrated because they set this corporate structure up back when there was no corporate income tax in the UAE. None of the income that these companies was generating was subject to income tax. But now that there was a corporate income tax, a lot of income that wouldn't have been subject to corporate income tax if they owned it individually was now being subject to corporate income tax because they owned it through this corporate structure. I was able to solve this problem for them because by putting a foundation on top of this corporate structure that meets the criteria of being a family foundation, that foundation can then elect to be treated as an unincorporated partnership, basically exempting it from the corporate income tax. And then the subsidiaries, companies underneath the foundation, which were generating the types of income that would not be subject to corporate income tax, can elect tax transparent status, and you basically put back in the same position that you would be from a tax perspective if you own these assets individually. These tax elections of being able to have a UAE foundation taxed as an unincorporated partnership and electing for subsidiary companies to be taxed as tax transparent has taken any disadvantage out of using a foundation with underlying companies as a structure. There's no more tax disadvantage for that if you use these elections. And it's also provided a solution for a lot of families in the UAE that have these legacy structures that own assets, that generate income, that wouldn't be subject to tax if owned individually, and weren't subject to tax when these legacy structures were set up, but now are. This is all solvable using a UAE foundation or even a UAE trust. This is great news for anybody who wants to either use the UAE as a wealth planning jurisdiction to have a trust or foundation and to have holding companies that underneath the trust or foundation that are going to own assets, and also for families here in the UAE that want to use UAE-based trusts and foundations for estate planning and wealth protection purposes. It solves a big tax problem for the people here in the UAE that have these legacy structures that weren't subject to tax in the past, but now are. So I think this is really innovative on the part of the UAE to make it on par with offshore jurisdictions that don't have income tax at all, to make the UAE still very tax advantaged and exempt these investment type incomes from tax if properly structured using a UAE trust or foundation. Anyway, I thought that this was something that I wanted to make my listeners aware of because, as I mentioned, this one family, they've been paying a whole bunch of unnecessary tax simply because they had a legacy structure. If they just would have put a properly structured foundation on top of it, they could have avoided a lot of tax. They're going to avoid a lot of tax now legally because I'm going to help them set that up. But I've also come across several other current clients and new clients that are completely unaware of these tax elections and have UAE structures where they're paying tax unnecessarily. There's a lot of people, like I said, who have structures that are paying tax unnecessarily. We can now solve those problems with these tax elections. Anyway, I hope you've enjoyed this episode. Stay tuned for more knowledge in future episodes.